Hello everyone, welcome back. In this video we are going to discuss about the pattern 4. Okay, let's move on to the pattern. Okay, this is the pattern 4. As I explained, left side it's considered to be the buy, on the right side it's considered to be the sell one. Okay, uptrend, downtrend, buy trend, sell trend. Okay, here as you can see, you can consider this as a fake one. Okay, the price initially sometimes in the smaller time frames it would have retraced here, it goes up and then again comes down instantly or later. After that, when the price tries to reach that area, you can scalp here. It's not necessary it should be first time. There could be few other times or few other resistance or supply in that area. Okay, this is the support and demand. As you can see, price comes down, it could have bounced here, it broke down and it again went up. When the price again tries to reach that level, it actually bounces back in this area. Okay, this should be the bounce. This is almost similar as a head and shoulder pattern. There could be a resistance here. Even if there is not a resistance, it's okay. If it is not necessary that it should be a head and shoulder pattern or inverse head and shoulder pattern. This is the whole idea of the pattern here. Price breaks, again comes down, again retest in that area. So the core area is important here. Okay, so the price reaction, it depends upon the price structure. It is very much important we adopt. See, I have shown you few more examples and few more patterns. It can be perfect and it won't be perfect. You have to train yourself, okay, to see that properly. The idea is that use the line chart and the multiple confluences of the resistance or a support area. As you can see, the price beautifully bounces in the line chart. Okay, try to correlate with the by marking few one or two or more lines in the daily and weekly. If you combine that, it will be very much easier. Okay, let's move on to the pattern now. Okay, I'm taking this as the top. This is the recent one. Okay, let's see how the market has behaved. Yes, it went up, again down. As you can see, when the price again reaches that level, there's a bit of bounce. So this is where you take your sell ladder scalping. See here, multiple times, 1 2, huge rejection from there. Okay, see here, the same thing again. Price comes down, breaks up, again when it retest, you can go for a buy. Excellent buy area this is. Okay, this is one of the most powerful patterns, almost similar to inverse head and shoulder pattern, but the idea is very simple here. Okay, the price tends to hold back or bounce in those areas only most of the time. It happens all the time, in fact. Okay, let's see here. This is the combination of support, supply or resistance area. As you can see here, goes up, down. See here, goes up. You can see in the smaller time frames it came down, again it goes up. When it touches there, you can go for sell. Yes, same here, broke up, came down. Once it touches that area, okay, you can go for sell. The more it comes down in that area and it goes up, it's likely to bounce back. Okay, same scenario here. The more price goes up and then comes to that area, it's more likely to bounce. Okay, as simple as that. Okay, let's take this one here. Okay, see here the price broke down and it went up a bit up. From there it drops. This could be a very good buy area. So it goes the vice versa. Okay, again it drops. From there it touches the price. You can also take a scalp here. So there are so many patterns here as you can combine as you want. Don't get confused. The most important thing is line chart. It works beautifully, but when you do it in the first time, it works. If you miss it, it might work most of the time in the second cases or third cases, fourth or fifth cases. But most of the time, first one is very important, and see to that very carefully. Okay. Okay. Let's see if there is any in USD JPY. Okay, there is a bit of area here. Again it goes up, again it touches. You can see a bounce here. Okay, here it actually missed. When it touches here, again it bounces. It's a good one actually. Okay, same scenario here. When the price drops, it's likely to bounce in the area I have told you already. In this area I have taken this one. Okay, when the price breaks and goes up, the more it goes up, the more it's likely to bounce here. Okay, let's place it perfectly. Yes, let's zoom and see what happened in that area. Yes, once it touches the first time, there it goes, 70 pips. And not only that, see the price how it's holding perfectly. See here, one of the most secret place. Okay, if you master this alone, you can do the scalping very perfectly, very correctly, and very accurately. So just try to use the USD JPY and Euro USD alone. I would suggest to use Euro USD most of the time, because its spread is actually exactly equal. Okay, 1 pip is equal to $1. If it goes 10 pips, it is $10 for you. Okay, I mean if you have placed 0.10 lot size, and spread is exactly same in USD JPY. For a 10 pip of 0.10 lot size, you will get a profit of $7 or maybe 7.5 etc or $8 depending on the broker. Okay, both are good. We will calculate it. I will show you the cycles and calculations, how to use that to our advantage. It will be so good and too good actually. You would love it actually. So my point is that use the line chart wisely. Okay, I hope it's all clear now. You would have got an idea about this, about this pattern and about the previous patterns too. Okay.